In a time when many construction stocks are struggling to stay afloat, one under-the-radar marine contractor is quietly making waves: Orion Marine Group, ORN. With a surprise earnings beat and rising revenue, this company might just be sailing into a turnaround story that investors shouldn't overlook. Despite facing a choppy market and losing ground in share price earlier this year, Orion's financials are telling a different story, one of resilience, steady recovery, and hidden potential. Could this be a sleeping giant in the heavy construction space finally waking up? Let's dive into the latest updates and uncover why Orion Marine Group could be poised for a comeback. Orion Marine Group, NASDAQ, ORN, a prominent name in the heavy civil marine construction industry, has recently drawn attention with its better-than-expected earnings. While the broader market and industry pressures have weighed on many construction stocks, Orion has shown promising signs of resilience enough to make investors take a second look. For the quarter ending March 2025, Orion Marine reported earnings of 1 cent per share, which may sound modest, but it's a huge win compared to what analysts were expecting: a loss of 11 cents per share. That's an earnings surprise of 109%, indicating the company is outperforming expectations in a tough industry environment. A year ago, the company posted a loss of 12 cents per share, which further highlights the improvement in its bottom line. This isn't just a one-off event. Orion has now beaten EPS estimates in 3 of the last 4 quarters, showing that the business has been quietly building momentum over the past year. In the previous quarter, analysts predicted earnings of 15 cents per share, and Orion came in slightly higher with 16 cents, delivering yet another positive surprise. These repeated earnings beats suggest that the company is navigating the market challenges better than many anticipated. On the revenue side, Orion posted $188.65 million in sales for the quarter, 8.7% higher than what analysts projected. This represents significant growth from the $160.67 million reported in the same quarter last year, marking a healthy year-over-year revenue increase. Clearly, Orion is not only stabilizing its earnings but also expanding its business footprint. However, despite these encouraging numbers, Orion's stock price has declined by nearly 17% since the start of 2025, underperforming the broader S&P 500 index. This disconnect between strong earnings and weak stock performance raises a crucial question for investors: is the market overlooking Orion's growth story? Some of the stock's lag may be due to concerns over future earnings potential. Analysts were skeptical heading into this earnings release, which was reflected in the unfavorable trend in earnings estimate revisions. As a result, Orion currently holds a Zacks rank number 5, strong sell, a designation based heavily on those earlier downward revisions. However, these rankings often shift quickly after positive earnings results like this one, especially if management provides an optimistic outlook in the earnings call. Looking ahead, the market will be watching closely to see whether the company can maintain this momentum. The current forecast for the next quarter is an EPS loss of 8 cents on $198.35 million in revenue, and for the full year, estimates stand at 7 cents EPS on $814.79 million in sales. These targets may be conservative if Orion continues its trend of outperforming expectations. Another important point to consider is the broader industry context. Orion Marine is part of the Zacks building products, heavy construction industry, which currently ranks in the top 34% of over 250 industries. According to historical trends, stocks in the top half of Zacks industry rankings tend to outperform those in the lower half by more than 2 to 1. So, from a sector standpoint, Orion is operating in a relatively strong environment. While short-term sentiment has kept Orion's share price under pressure, the underlying fundamentals tell a different story. Improving earnings, increasing revenue, and consistent earnings surprises signal that Orion could be undervalued at current levels. Investors with a focus on turnaround plays or undervalued growth stocks might find Orion Marine particularly compelling. Moreover, the company is benefiting from an industry that could see increased infrastructure investment and marine construction demand in the coming years. If Orion can continue tightening its cost controls, securing new contracts, and delivering on earnings, there's a strong chance the stock could rebound sharply once the market catches on. In summary, Orion Marine Group has quietly built a case for growth. While its stock price has lagged, its financial results suggest a company that's turning a corner. If future earnings revisions shift positively, and revenue continues to rise, investors who bet early on Orion's turnaround could be well rewarded.